What is up, guys? Let's get to another trade recap of July 8th, 2026. I am absolutely hyped right now. Freaking banger. A lot of sauce in this trade. So much going into it. So many confluences. So much conviction in this trade. So much conviction, I front ran a 5-minute bearish gap, and I'm going to explain why in this video. I'm in Hawaii, so it's like 5 in the morning right now, and I took a very late trade. I woke up like at 4, and I looked at this New York AM. Horrible, terrible chop. Look at this. Like, it might as well be a bank holiday. And I was waiting for a setup like this. It was so textbook. Let's get into it though. 4-hour time frame. Let's see what we got. Reacting out of this 4-hour gap here. Market maker sell model here, wanting to take shorts unless we get a good rebalance to take longs. That was kind of the idea. New York AM kind of just ripped higher, and it kind of made this little U shape or upside down U. So I wanted to see maybe we come down into discounted of this range here and then take longs back up to these highs. And that's exactly what happened. So let's get into that. So we opened up a 30-minute bullish gap in pre-market that I wanted to see come get retested. But the reason why I liked this trade so much was because of the retracement that it had. We had OTE of this range literally perfectly. OTE 30-minute gap that's getting hit. That's the reason it got respected. So OTE is, I started implementing it into my trading now. So it's I normally don't use fib. I just use like equilibrium or premium discount. But OTE is optimal trade entry, so it's from 0.61 to 0.79, and this kind of like, I think they call them like the golden pocket or the Goldilocks pocket is kind of where you want to be entering your trades. So that was kind of the idea of the higher time frame on the 30-minute that I wanted to see. So now that we hit this 30-minute, I could have honestly just ripped this 5-minute inverse here. So we hit this 30-minute with the bullish SMT. We formed a bullish SMT, and then I could have just ripped this 5-minute inverse, taking this long up to that 30-minute, right? And I would have been in drawdown for a little bit, stops wouldn't have went here, would have been played out. However, I didn't want to take, I didn't want to rip this 5-minute. I normally don't like entering off of the 5-minute time frame. So what I wanted to see was this 5-minute fair value gap open up. So now, 5-minute fair value gaps, certain ones you can use as continuation trades. For cont trades, you want to be taking sponsored fair value gaps. So what does that mean? A sponsored fair value gap is a fair value gap that is made after hitting a higher time frame fair value gap. For example, in this case, we hit a 30-minute bullish fair value gap, and the reaction that we had off of it opened up a 5-minute bullish gap. So now this isn't just a 5-minute bullish gap, it's a sponsored 5-minute bullish gap, meaning price should not go lower than there. And we should revisit that and expect longs out of it. So we opened up this 5-minute bullish gap here, and what happened? Well, we traded back down into it, and there was no really valid inverses here. So what is it that happened? Well, we formed a on that manipulation leg, we formed a tiny 5-minute bullish gap here, right? So with that 5-minute, I wanted to see that get inversed, and I was like, if this gets inversed, I have a lot of conviction. I'll take this trade on the 5-minute time frame. And this candlestick absolutely edged me here, and we did not get closure above that. So that's what I did not like. What I did like in this trade is ES was corresponding almost perfectly. However, in every trade, there's something that's bad, right? On ES, we did not take out these lows, and we kind of formed equal lows here, which I did not like. However, I did have a lot of conviction that we were going to come higher. ES had the same 5-minute bullish gap, and these wicks are respecting our rejection blocks, and we're rejecting off of this 5-minute sponsored gap. ES did not hit a higher time frame gap. However, I guess you technically could count at the time this hourly gap was getting respected, and we could take longs out. We could seek longs out of it, even though it got disrespected. When I was in the trade, it was getting respected, and it was still valid. Now, let's go back to NASDAQ. So the narrative is there. We have a 30-minute fair value gap at OTE. We hit it, react off of it, forming a 5-minute bullish gap. We see a retracement into that 5-minute bullish gap, expecting a 1-minute inverse out of it. But we come up with the problem in the manipulation leg. We form a 5-minute gap. That can be inversed. However, we didn't get the inverse on this candlestick, which is what I was hoping for. It would have been a lot better RR. However, we didn't get it, right? Sometimes that happens, so I waited for the next candlestick. The next candlestick closed above here, right there, and I honestly, I don't know why I didn't enter off of that. I should have entered literally right here, but I kind of waited for a bit, and I front ran this 5-minute gap here. So I entered right here, and initially what happened is my first trade, I went break even at that 5-minute unmitigated gap, and then we hit it, break even instantly, literally instantly. And I told myself, I really don't want to see this trade run without me. What was it that made me re-enter right here and take the long again? What is it that made me re-enter and take the long, knowing we just hit this 5-minute bearish gap, which could reverse on us? Well, the reason why is because just everything. Like, we have low resistance here, leading up to our 30-minute bearish gap right here, which we're targeting. So we have a good target. We have a 30-minute bearish gap that we can target. We hit a 30-minute gap with OTE. We opened a 5-minute sponsored gap, hit that, or we're just switching to bullish order flow is what I'm liking. We're just starting an uptrend. You can just tell, like, just a general uptrend, right? And there's so many, like, ideas with this trade for it to play out. And the other thing that was like, damn, like, I know this trade's going to play out, let me not go break even at the 5-minute gap, was because MES opened up an hourly gap here. And that's a very strong draw. Like, I knew no matter what, ES was going to come here. And since the groups are paired, or since the assets are paired, if I know ES is going to go up, then that means NASDAQ's going to go up. And that was kind of the narrative and idea behind the trade. I even took a trade on ES that was kind of just an emotions trade, but we don't talk about that. Right? It ended up being break even. But yeah, that was the trade. It keeps running right now. I think it's going to keep running till these New York AM highs here. But I got my piece of the pie. I got my 1-to-1, you know. As far as stop loss placement, let's get into that. Honestly, I didn't really have an idea where to put stop loss, because I knew that when I was entering here, I knew that we were going to open up a 5-minute bullish gap. However, I think I just kind of put my stop somewhere at these lows, like at these equal bodies here, or just something like that. Just went for a 1-to-1 though. What was the better entry? In this case, the better entry was entering literally right after this candlestick closed. Would have gotten better RR there, and probably wouldn't have gotten stopped break even as well on the first trade. But that's okay though, because this was an absolute banger. Sorry, my power mode just turned off. There you go. But yeah, I mean, the narrative behind this trade was absolutely beautiful, and I could see this potentially still running. However, I am out with the 1-to-1. As soon as I entered my second trade, we had a very strong reaction. I think I went break even like somewhere around here. And around here, we started to chop a little bit, but I still had a lot of confidence that we were going to hit CP just because there's a 30-minute bullish or bearish gap here that we could retrace into. Oh, and also the reason for this chop was because about right around this time, like right here, ES hit that hourly gap. It hit, let's see. It hit its target already. So I was kind of monitoring ES to make sure that it doesn't get a bearish reaction off of that, off of our target, right, the hourly gap. So as soon as ES hit that hourly gap, that's when I went break even and started to trail my trade a little bit. I think when it hit right here, I think I trailed to like right here or something like that. And when it's like right here, I trailed to like right here. But yeah, that's why I went break even, because ES hit a higher time frame DOL. So yeah, that was the trade. No, I mean, just everything went in it. Like, yeah, I front ran a 5-minute bearish gap, which is not the smartest, right? But you got to think of the pros and cons of the trade. There's always going to be a con with the trade. In this case, there's 3 cons. One, we're entering during lunch hour, which is not very strong, right? We don't want to be really entering during lunch hour. What's another one? Oh, the second one is that we front ran this 5-minute gap here, and we traded through it, expecting it to get disrespected, right? Which is not always smart. Which is not smart at all, honestly. And then the third, and probably the worst in my opinion, was the equal lows that we left here. And ES did not sweep out. If ES swept out these lows, dude, this trade would have been even more beautiful. But yeah, we should just see this run. And yeah, that was the trade. So yeah, peace.